What's up, guys? It's RP Forex back with another video. Today we're going to be talking about the difference between market orders and pending orders. Now, market orders are the most common way to enter a trade in Forex. It's a direct buy or sell at the current market price, and it's the most common way beginner and even advanced traders enter their trades. Now, when you get into advanced strategies and you start trading more, you'll find the need for pending orders. Now, what pending orders are is exactly what it sounds like. It's basically a order that has not been activated, and it will be activated at a future price point or time. And there's four types. There's buy stop, buy limit, sell stop, and sell limit. Now on Euro USD, which is the chart we have here, we're going to go through some scenarios where each of those pending orders will make sense. So first off, with the buy stop, we can see on our chart the two blue horizontal array lines that you see right here and here represent our weekly resistance and support. The two yellow lines are our daily support and resistance. Okay, now you can see Euro USD is coming pretty close to daily support, and let's say you want to long. Let's say you're a trader and you want to look for a bounce from this support. Okay, and then when price comes up to this resistance, right? If price breaks above this resistance, you want to take a long position from here to the next resistance. Okay, so if that makes sense. So we're at support. Let's say we get a reaction from support. Okay, and if we break our daily resistance here, then we're going to enter a order to target our weekly resistance, right? We want this long trade. How would you get this? So instead of spending the next few hours or few days in front of the charts, what you can do is set a buy stop. And what that means is let price increase to somewhere around here. Let's choose a specific level. So for our buy stop, we'll choose that level. So let's say we tell MetaTrader 4, we're going to put a buy stop at 1.10730. Okay, so that tells MetaTrader 4 or CTrader, whatever trading app you use, that once our price comes here, enter me in a buy to go up to here, right? We'll have a take profit here, and your stop loss could be somewhere down here. That's a buy stop. Now, a buy limit is the actual opposite. So remember what I said in the beginning, how we're coming close to support, right? If you look at Euro USD, it is still a bit of a way from our daily support, maybe 5 or 10 pips away, but it still has room to actually touch it. So let's say instead of getting this move, we want to catch the initial bounce from here. So let's say we want to catch this move down here. So we tap resistance and then we go long, right? So it's still a buy, but in this scenario, we're waiting for price to drop a bit and then go long. And this is a buy limit. And to do this, we'd have to choose a specific level. In this case, we could use our resistance level, so the 1.09907. So we'd go on our trading app, MetaTrader CTrader, and put a buy stop at this exact level. That'll tell your app that once price comes to this level, to put me in a buy, and our take profit will be somewhere here. Does that make sense? Awesome. Now, the next one is a sell stop and sell limit. So a sell stop is very, very similar to what we just talked about, but the complete opposite. So for a sell stop, we want to enter short. Let's say we have this support, okay? Now, we want to target this trade, okay? So let's say our daily support gets broken. If it gets broken, more often than not, it would probably go down to our weekly support. And let's say we want to target this trade. Okay, we're going to sleep, we're tired, we want to target this trade, but we don't want to stay up all night. So what you do is you tell your MetaTrader, hey, listen, if price can, get to just a bit below support, so maybe at 1.09838, enter me a sell. So a sell stop at this level right here will put you in a trade to go short to take profit down here. Now the sell limit is the exact opposite. So let's say currently we're right here, and let's say you use a Fibonacci retracement. So let's bring out the Fibonacci retracement and just plot it like so. Okay. Now let's say you plotted your Fibonacci and you want to go short on Euro USD, but you don't want to go short just yet. You want to go on one of these fib levels. So you tell MetaTrader basically this. If price retraces back up to, let's say, the 38.2 fib level, which is 1.10329, enter me in a sell so I can catch this potential move, okay? And so that's a sell limit. when you want price to increase to enter you into a short for the price to decrease. Hopefully that makes sense. So sell stop basically means continuing on with momentum. Sell limit, you want to break in momentum. You want to enter and then continue down. And the same thing with buy stop. So a buy stop, you're going with the momentum. Buy limit, you want to pause in momentum for your order to get activated and then you go. So hopefully that makes sense. And those are the 4 situations where using pending orders will work out. Mainly, we wait for price action to play out because more often than not, pending orders can get you stuck in fake outs, and it's not a good time. So if you check out our trading view or some of our free sessions where you go over why we prefer using price action and direct entry rather than pending orders, but sometimes life gets in the way, so you have to use a pending order, which is fine. So that's how to use pending orders and the difference between market orders and pending orders.